Wow. Okay. Where do I start? Good morning. It's a major banking crisis going on at the moment. Major, major, major. And anyone who underestimates it is simply not informed. Okay, so let's kick off with the news, which is old news, but you're probably already aware of it. Credit Suisse just got a $50 billion injection of capital loan from the Swiss government. Okay, they can now invest in Swiss cheese because they've got as many holes in their bank as they have in Swiss cheese. So the whole thing's a complete waste of time. I don't know how $50 billion is going to help. They're going to burn that money as well. Now, Credit Suisse First Boston's been around for over 150 years, okay? So you're talking about a well-established global bank that's in major trouble here, okay? Now, this is, I would not necessarily say it's contagion, because Credit Suisse has already had problems for many, many years. Their poor investments, their poor loan book, and their poor management of the business has caused them to go down. However, the follow-on from the Silicon Valley Bank, Signature Bank, and Silvergate Crypto Bank last week has probably frustrated and intensified the problems that they have. So they've got major liquidity problems. They turned to their biggest investor, which is Saudi Arabia, and asked for more money, or asked them, would you invest more money in our business? And Saudi Arabia said no. As a result of that, the ADRs in America, in the US, the American depository receipts, which is a way where a US citizen can invest in overseas stock, dropped 14%, okay? And that caused extreme concern in the banking sector, sending down the Dow, specifically the Dow, because the Nasdaq held up quite well because it's technical and therefore high tech. It's not really exposed so much to the banks, but sent down the markets overall. At one stage, the Dow was down 726 points before rallying to close down about 280 points, okay? So there is real fear out there that this banking crisis, or this banking blip, as some people call it for some reason, is a concern. Now, the market split into those people that believe it's just a blip and those believe that it's start of greater things. I personally believe it's not a blip. I don't think the banking sector is going to collapse completely. I don't think we're going back to 2008. However, there's a lot of banks come under the spotlight. Now, the Goldman Sachs has downgraded the GDP in the US from 1.5% growth to 1.2% growth, and that's on the back of the smaller banks pulling in their reserves and probably restricting lending out there to the smaller businesses. Remember, 60% of loans in the US, for example, are given or loaned out by smaller banks, and they're going to have to now preserve their liquidity. So the lending criteria is going to become a lot tighter, because what they don't want to do is lend money and then run a bad book and have more run on their liquidity. In addition to that, they're going to have to preserve liquidity in order to allow for withdrawals from the bank, because once a bank does not provide the customer or the account holder with withdrawals, then that is another breach of confidence. And that effectively what's happened to the banks so far, and that's why Joe Biden and the US stepped in. Now, what's interesting regarding Silicon Valley Bank is that most of the depositors there are millionaires. They're unicorns, they're high-tech exits. They've got millions and hundreds of millions and tens of millions, whatever they've got in Silicon Valley Bank. It's not really a small account holder bank. So what Joe Biden has done is actually maintained the wealth of the rich in Silicon Valley Bank. It's a small account holders, let's rephrase that. It's a not small account holders bank. It is there for the exits, the high techs, and all those millionaires and billionaires who want to put their money there in security. Joe Biden's just actually guaranteed their withdrawals. So the question is, what's going to happen to the smaller banks that aren't part of the high-tech sector? For example, First Republic in the US, also shares dropped significantly, as did Zion's Bank and as did Co-America. Interestingly enough, Charles Schwab went up because after the CEO there bought around about 50,000 shares from his own personal account. He gave a bit of confidence that Charles Schwab is not going to go bust. Okay. However, each financial institution and each bank is now going to be under the microscope. So the whole banking sector yesterday, including the big banks of JP Morgan, Morgan Stanley, Bank of America, all dropped in line with sentiment which is negative as regards banking in the US and globally. Okay. Also in the UK, the banks dropped. Barclays Bank was down 13 pence, which represents around about 4 or 5%, if I'm got it right. It could be wrong. Okay, correct me if I'm wrong. I'm sure there's plenty of people listening who could get that wrong, but that's just an example. Okay. So HSBC bought out Silicon Valley Bank for £1, but the UK operation, they're going to have to invest around about £2 to £3 billion in order to resuscitate it and keep it going. So it looks like we're going to have, going forward, government intervention and some mergers and acquisitions in the banking sector. Moving on to other things that also impacted markets was retail sales in the US came in lower than expected. Okay, that's food and clothing came in lower than expected. Those are the major components, and that gave a boost to those investors and traders hoping that the Fed will not raise interest rates as much as they initially anticipated. Now, what's interesting enough, this banking crisis, which could cause concern among consumers, could actually facilitate a drop in inflation, because oil dropped yesterday over 450 points. Precious metals and copper were down significantly yesterday. Gold went up as a safe haven. Also, US Treasuries shot up in price and the yield dropped to 3.49. Remember, as the price rises, the yield falls. As the yield rises, as the price falls, the yield rises. So the yield on the 10-year US Treasury is now 3.49%, and that's mainly due to the crisis, because it's considered a safe haven. Again, depending on the type of crisis, then there's different types of safe havens, whether it could be gold, could be the dollar, or could be bonds. In this case, it's bonds and gold, not the US dollar, because the US dollar would be under threat if there is a problem with the US banking system. Remember, Moodys a couple of days ago moved the US banking system from stable to negative. Okay, Moodys, the rating agency, which people have seemed to have overlooked. So there's a lot of commentary and a lot of concern in the banking sector, and that's going to continue in the foreseeable future as more and more banks look like they're going to fail and need assistance, whether it's governmental assistance, shareholder assistance, or just to do mergers and acquisitions. This is Mayor Walensky with Driving Markets. So subscribe, share. Speak to you soon.